We experienced a lot of difficulties operationally in the last several years as a result of natural disasters, fires, floods, and then we had a write down on one of our operations resource numbers. That seems to be turning around right now. Two, we're operating well in the second quarter. Third quarter, I think we'll have all three operating, the three mines. And so looking at how do we contain the cost, because inflation's affecting all mining, we're looking at longer contracts for consumables. And there's not a lot of other room other than trying to put more ounces through so that you lower your unit cost.
Developing Gold Bar South will help at Gold Bar.
That's
and
true.
And the Froome mine at Black Fox is performing well. It's quite a different mine than the previous Black Fox mine. We're drawing all our production there, so we're no longer mine constrained at Fox. So those things should help in quarters to come.
So Nuton is an interesting company. It's a company within Rio Tinto, and it's comprised of a portfolio of technologies that Rio Tinto has aggregated over decades of experience in copper leaching. And initially, we wanted Nuton to test material from Los Azules to see whether their technologies would apply. And as part of that conversation, we were talking about financing. We were working on a private placement for McEwen Copper, and they put up their hand and said, "Well, we would be very interested in providing that capital." And we said, "Great," And there was a pretty long process of due diligence on the project, and a pretty long negotiation. But we got what we think is a very positive deal, which validates technically the Los Azules deposit. They also earned into our Nevada asset, which was a secondary asset that we weren't able to commit a lot of effort, time to, or money. And so, we thought that was a good outcome as well. Rio Tinto earning 60% by spending $18 million on exploration. So that was kind of how it came together, and we're very, very happy to have them as a shareholder.
We are going to complete first our updated preliminary economic assessment, which is the technical document that we're going to use towards the first half of next year as the basis to go forward with the IPO. And the idea is that McEwen will issue the shares for McEwen Copper, and therefore the McEwen shareholders will participate in that IPO. So McEwen Mining will continue to hold interest in McEwen Copper.
I do believe that MUX is very undervalued. A large part of that value can be attributed to McEwen Copper, which is now just being really shown to the market. It's, if I were to look at it, between the indicated and the inferred resources, if you were to convert that to a gold equivalent, it would be equivalent to a 60 million ounce gold deposit. And if you look at the PEA that was completed in 2017, the annual production of 415 million pounds of copper would translate into over 800,000 ounces of annual production at a cost of under $600. So, and a 36-year life and a payback in less than 4 years at $3 copper. So I look at McEwen Copper as creating a copper unicorn, and that's going to turbocharge the value of McEwen Mining. As you heard from Michael, that we currently in McEwen Mining own 68% of McEwen Copper. So let's do a couple of numbers. There's a few reference points. We're in the province of San Juan, Argentina, and there are a number of other copper deposits there. Two that I'm going to mention: Jose Maria, which was bought out earlier this year for $485 million, and Filo Mining, which had some wonderful drill hole intercepts and currently has a market cap of $1.5 billion. Now, we're a little different than those two in a number of important ways. First of all, we're located at a lower altitude than them. We're at 3,100 meters to 36, and they're above 4,000 and 5,000 meters. We're closer to infrastructure, roads and highway, roads and power grid. Our resources are more than twice theirs, published resources, and our grades are higher. So we look at the 485 and say, well, if you were to discount it by 50% and multiply it by 68% and divide the product of that multiplication by 51 million, which is our outstanding shares, you'd have a value of $3.24 per McEwen Mining share, value sitting behind it. I think because we're larger and closer, and you could look at, say, well, we could be as much as the value of Filo. And that would, doing the math on it, that'd be a $20 value behind every share of McEwen Mining. Elder Creek, as you heard from Stefan, Rio came into there and optioned our Elder Creek property. And that's putting a value on it of $30 million. And that'd be about 59 cents a share. We have a portfolio of royalties, and there's probably value there of about just under 70 cents. And then we have our precious metals. And if you just lowballed them and said they're only worth 100 million, that's $2 of value. And if you said, well, maybe they're 200 million, that's $4 of value. So you're looking at a value of $6 to $25 a share. So I think it's very undervalued.
So Elder Creek was an asset that was held within McEwen Mining for quite a number of years. A few years ago we did do some exploration there, but in recent years we hadn't done a great deal. Because the primary target there is copper, it's got a fairly traditional copper porphyry signature in the geophysics, and there were some drill holes there by a prior joint venture partner or optionee, I guess it was, that were encouraging for copper. We decided to move that into the McEwen Copper portfolio. And then when Rio Tinto came along and said, we would be interested in exploring there, it made sense to do an option deal with them. It was non-core to McEwen Copper. McEwen Copper is focusing all its attention on Los Azules, which is undoubtedly the right thing to do. So this asset, it moves it ahead. Rio Tinto is going to be operating the exploration there, which will go on for a number of years into the future, and we hope they have great results. If they do, we'll own 40% of whatever they find.
When we update our PEA, instead of going through a PFS, we directly go to a feasibility study. This takes out somewhere between 1.5 and 2 years of times to development, and that means that the potential benefits for the McEwen shareholders will be brought forward by that time. So I think that is a very beneficial development, and I think that the Nuton collaboration, the Rio Tinto collaboration, can help us with that.
We've engaged the services of an architect who's very prominent in the field of green, sustainable living buildings, and we've said to him, we'd like you to reimagine mining, and so that we use less carbon, less water, our impact on the environment is smaller. What can we do to create a new model for going forward in mining? Because we recognize that the industry, or at least the public views the industry as needing to reform itself. And that's why bringing this architect in to look at the development of Los Azules, and as Therese finished with that, we'll look at our other operations as well. But for your investors who can't wait for the IPO of McEwen Copper, a good way and the only way of playing it is by buying shares of McEwen Mining today.